Hey folks, Dan Frio here with your Mortgage Minute. Today we're going to talk about recession, okay? Is it bad? Is it good? Are we in one? That's what we're going to talk about, because my goal here is to inform and educate you guys everything real estate, especially when it comes out with the financing piece of this puzzle. So the first thing we want to say are we in a recession? Well, what a recession is 2 quarters in the US of negative GDP. Well, thanks to a subscriber of ours, Moses, he was able to provide us an article that I completely missed yesterday. So let's get over to it. Here's what mortgage rates did yesterday. Fantastic day for mortgage rates, but they are going to, I think, continue their descent, and here's why. The Atlanta Fed came out today and said the second quarter GDP in the US, as of yesterday, they're seeing a negative 1% from a positive 0.3%. So what does this mean to us? Well, Q1 of 2022, we had a negative I think it was confirmed yesterday, negative 1.5. So if now they confirm that the second quarter was negative 0.1, we're in a recession. So now do you fear? Now it's like, okay, what's going to happen to my house? House values are probably going to crash because of this. What are mortgage rates going to do? Well, great question. We got an answer to all those for you. So let's go to the articles that we have and all the information I can provide you. The first thing we're going to look at is forget rate hikes. These analysts are predicting interest rates cuts for the next year. Okay. Why? Recession. The next thing is the US bond market yields are tumbling. Why? Recession. The next piece of the puzzle is active inventory records the largest gains ever in June for real estate. Okay, there's an agenda that I have here, folks. I'm trying to show you that everybody is coming out now. All the analysts are saying, okay, we're probably in a recession. What's this going to do to us? Well, it's going to probably have rates coming down. House values, what are they going to do? Well, let's get to that data as well. So then we go over to this section, real estate. This is a headline news. This is what I go over every day. But the one thing I wanted to let you know is what happens with interest rates in a recession? Well, they normally come down on average about 1%. Okay, so interest rates typically during a recession slows. Interest rates usually fall in a recession as loan demands plummet. But here's what you're interested in. What happens to real estate during a recession? Well, most of the times what everybody's predicting is house prices are just going to plummet. And that's what all the fear mongers out there on all the other channels are telling you. But is that the fact? Well, let's go over to that data too that we have here. So let's look down through here. The housing market has experienced over the past 10 years, exceptional increases in values, where the median price jumped over 117% over those 10 years as of March 2022. The only time in history that it was higher was the 2007 to 2009 range, where home prices went up 121%. Now, the experts are heeding warnings over the potential recession. Here's how it might impact your house value. Well, I bet you didn't know this piece of the puzzle, and I've been trying to explain it to everybody. Ignore that ad. If you want to use them, please use me. Recession in real estate. The impact of a recession can be felt across the entire economy, everywhere from employment to spending to stock market movement, and even real estate. Well, the stock market and housing market can fall during a recession. It's not actually guaranteed to happen. In fact, falling prices are less common than you think. Home prices have remained steady or risen the last 5 recessions. The only one that it didn't was 1990. Why did we see a lot of this? Well, a lot of that was just over demand, over stimulation, and other things like we have today. But only one time out of the last 6 have we seen home values plummet. So I'm hopefully, based on that information that I provided, you get a little sense of, okay, maybe it's not going to be so bad, but this might give a lot of people an entry point into homes, because my prediction is, and I've been steady for this for about 2 years, is I'm seeing rates this year about 5.5% at year end. But now we're starting to see more supply, a lot more supply in the market. Okay, so that's pushing up the supply, which is going to cause the prices to basically stagnate. I didn't say decrease. You're still going to have areas that still go up because the demand's still crazy, and you're going to have markets that go down where it's just outpriced or just there's no homes available. But we just studied through here that a recession is going to cause rates normally to reduce or come down. And prices on homes don't necessarily have to plummet. They don't even have to necessarily go down, because 5 out of the last 6 recessions, we didn't see a price reductions. This market, can it be different? I don't know, and that's only time's going to tell. But based on all the data that I have, in a conclusion, I think they're going to announce that we are in a recession. People are going to freak out, but it's starting to stagnate the market. But the good news is, hopefully it gets into the consumer psyche so we can all start slowing down our buying, thus driving down inflation. Based on all this, with the recession, we could possibly see the mortgage rates and rates in general starting to come down. You can see that people are pushing their houses on the market. They're finally like, okay, I gotta sell. I can't sit here and wait. So housing inventory is coming back strong. So this is just feeding back into, I think we're going to get back to a normal real estate market. We're not going to see a crash. So that's my report on recession today. I hope you find that interesting. So let's get over to where mortgage rates are for the day. So the first thing we want to see is what's going on in the MBS market. This gives me basically a crystal ball into what's going on with mortgage rates. So let's refresh this because it is rallying like crazy. We're up 58. Okay, so what does that mean? Basically, this right here is what's happening to the mortgage-backed security bond that trades on Wall Street. Basically, the biggest take I need you to take on that is what happens with this is this price of the bond that you're seeing right here behind me is it's going up. It's driving down the yields on mortgage rates. So it's driving down interest rates. Okay. We hate when this number that you're seeing right here is going up, or I'm sorry, down, because when the price of the bond goes down, mortgage rates go up. But you can see it's basically been a catastrophic year. But look at the bottom right down there. Is this a bottom? Is this a short-term reprieve? Excuse me. I don't know, but this might be a great entry point to get into. So what's going on with mortgage rates right now? Well, here's where mortgage rates ended last night. This is going to feed, this trend right here is going to feed in today's rates when they get posted out by all the banks, because this rate, this is what's going on here, is an analysis done by Mortgage News Daily. So let's get over to it. Mortgage rates are starting to come back down. You can see we're pretty far off of we're about 0.5% off of the highs, which is fantastic. So here's what's going on with mortgage rates. This is published by Mortgage News Daily every day. I just use this because it's very easy to read. You can go across here and see where the average mortgage rate is for each category. But what I want you to understand is the changes. So for example, if you look at this cell right here and you didn't lock in yesterday, you're probably going to get about a 0.25% reduction in your rate. It might even be better today once rates get published. So it goes across the board right through here, okay? Sentiment for today is fantastic. It's a short day. There's not a lot of economic news out there, but I'll show you that here in a second. So they're expecting this rally to continue. There's a lot of people probably not working on Wall Street or in the pits today. So we might see this rally continue. I am a big locker of locking in rates today, because this is a huge move that we've seen so far this week. Economic calendar for the week. There's really not much out today. Yesterday was a gang shell day, but today we're going to just see a lot of oil stuff coming in and things like that. But yesterday we had the PCE and other factors come in that I reported on. And so that's my report of the day, guys. So I hope you find value in this. If you do, please don't forget to subscribe down below. I also have a free newsletter down there, so you can get data like this every morning and a special report on Fridays to wrap up the whole week. So if you like what you see, please subscribe to that as well. If you're in need of a mortgage, here's the 2 biggest pieces of the puzzle that we have that we're offering clients. We have an extended lock. If you're building a house, please reach out to us. We'd love to help you, because we have locks up to 6 months. That has no cost, there's no points, there's no application fee, and we can also extend that out further, but there are costs to extend out to a year. The other piece of the puzzle, if you're looking to buy right now and you keep looking and looking, just can't find anything, well, did you know you can lock in a rate right now? up to 6 months. So if you can find a house in the next month or two, you can still capitalize on today's rates. But the thing most people say is, okay, Dan, you're saying rates are going to drop, so why would I lock in today? Well, I want you to lock in today. Here's why. It's a protection, or basically an insurance policy if rates go up. Okay. Now, if rates go down, we have in most cases a float down policies with a lot of the lenders that we use. But if not, if rates drop enough, we can actually change lenders and move you to a different lender to capitalize on those falling rates. So you have a win-win-win situation. So other than that, I want to say God bless. It's a holiday weekend, so be safe out there. Have a blast, but please be safe. Enjoy your family. Give everybody a hug and a kiss, because you don't know, we're not guaranteed to have another tomorrow. So I hope you find value in the channel. Again, if you did, please don't forget to give us a thumbs up. I will see you guys on Monday, or actually Tuesday. I'll see you then. Take care, guys, and I greatly appreciate your support. See you soon. Bye-bye.